Happy Monday, everybody. It is 8:01 a.m. Chicago time on Monday, the 11th of December, 2023. Thanks for joining me this morning. Again, it is Monday, quad witching week. We have quad witching Friday this Friday, multiple expirations, futures, expiration, options on futures, and options on stocks. Usually, traditionally, a pretty choppy week. Episode number 2587. A reminder that derivatives trading is not suitable for all investors. Past performance may not be indicative of future results. Here's what we have. Again, it is rollover this week. It started today. We are trading March, looking at March. Right now, you can see that March is on the board here in the indices as well as the treasuries. The market position, the market risk posture is mixed this morning. We have a perfectly balanced market at the moment. Nothing to report in terms of key earnings. We have Oracle after the close. We have a couple of big ones this week. Oracle, I think Costco and some others. Not much news flow either from the weekend. Hang on one second. We do have some heavy numbers this week, though. We have U.S. CPI tomorrow. U.S. CPI tomorrow. We have U.S. PPI on Wednesday, and the FOMC decision. Of course, they're going to get their CPI and PPI before that comes out. That decision is on Wednesday. Then Thursday, we have the Bank of England and ECB rate decisions as well. And we have U.S. retail sales on Wednesday. Just as an indication, the S&P last week gained about 0.88%. The Nasdaq gained 166 basis points. And I think the Dow gained something like 40 basis points, kind of lagging behind. And again, triple witching week. Today, we get consumer inflation expectations at 11. We get a three-year and 6-month notes. Remember, pay attention to these notes. Pay attention to these notes because they have really driven the market in the past. The 10-year note auction at 1 o'clock here is something you'll want to pay attention to. The 3-month bill, not so much, but the 10-year note's a big one. And then we have at 3:10, we have ECB's Macau, and then this evening, Japan's PPI for November, and a 5-year JGB auction. Those are Japanese government bonds. The S&P itself is balanced this morning. The volume is tricky. I want to remind you that during rollover, as we roll, the volume is no longer indicative of, is not necessarily indicative of directional interest. So the aggressors, so your cumulative delta, your overall volume and so on is no longer an accurate indication of participant directional views because of the roll. Okay, so you see the volume there is 113,000, and that's because we're quoting March, but there's also volume, relatively heavy volume in December still. So some people are still trading December, some people are still trading March. You should be trading March. And then in between those are calendar spreads that are, if they're long December and they need to be long March, then they're selling December in a spread, buying March at a premium that's preset. So at this point, a lot of participants are trading the premium between. And the premiums, speaking of premiums, the premiums are right here. These are the rollover adjustments. If you go back to last week, last Friday, Friday a week ago or so. That high in the S&P RTH should be 46.60 and a half. It should be, all of your prices should have back adjusted by plus 52.75 points. If you pull up your charts, and there's a 50-point gap or 52-point gap in there, then your charts did not adjust in the past. They need to bring the past prices, all of the past prices, up by 52.75 points in order to match. So if you're looking at the NQ and you're like, oh, wow, there's a 200-point gap on Friday or today, then your charts are incorrect. Okay, don't want to throw gasoline on the fire here, but that's a fact. The Dow, 363 points difference. That's pretty massive. EMD, for those of you who trade it, not a very popular product currently, but it used to be 27.4, and an RTY, a whopping 20 point, basically 19.9 point difference in the two contracts. But 52 points used to be a week's worth of range in the S&P. With the interest rates being as high as they are, it's pushing the March futures price versus the December price, which this week, well, let me ask you this. What will be the difference between the futures, the December futures contract, and the S&P 500 cash index this Friday? What will that be this Friday? Let's see if you guys understand what's going on here with futures. What will the futures, the S&P December 2023, the Z3 contract on the morning of Friday, what will be the difference between it and the S&P 500 cash index? I'll let you answer that. Meantime, I'm going to jump to Edge Pro X to look at what's left. So, one more thing. Notice the rotations. The rotations relatively stable last week. We had some upticks in the Nasdaq and the RTY in the rotations, but overall pretty flat, sticking around 4.25 points for the S&P, 19 points, 18 points for the Nasdaq, and so on and so forth. The range for the extreme, or the one standard deviation of the range, of the daily range, did not move very much for the S&P, 58 points. That's what we would consider the edge of what's normal. So if we have a day where the range, the RTH range, goes to past 58 points, we have to recognize that statistically speaking, historically speaking, if it passes 58 points, now you're in the second standard deviation, which only has a 4.5% historical probability on both sides of the curve. And if it's a normal distribution, then it's half of 4.5. So there's a 2.25% probability that the market will close above 58%. There's a historical probability. The probability will happen today is always 50-50. But a historical probability, and that's what these numbers mean, by the way. That's what these ranges mean. Same in the NASDAQ. If the NASDAQ is trading and the range for the day is now pushing above 238, what that means is up to 238%, 238 points, it means there's a 68.2% probability, which is one standard deviation, that the market would close within that 238 point range. And then once it ticks above 238 points, the probability drops off dramatically. So if you're long and the market has moved 238 points already in the range, this is an indication to you to get less aggressive, possibly, about being long, because it's stretching the historical statistical band. Of course, if it's driven on news, the Fed comes and cuts 50 basis points or something, the story changes. but under normal circumstances, that's what these numbers mean. And the ranges have been dropping for the NQ, RTY, and YM. And that's what these are updated once a week. So take a look every Monday because it's important to understand these, and it's important to understand the rotations to get a measure. And we have these up-down markers, up-down flat markers to let you know how the volatility or how the ranges are moving. So you can be an educated consumer or trader. The condition of the S&P auction right now is balanced. Let me turn down my news. Is balanced. Volume's 115,000, which is well below what we would consider to be what we would expect. It's normal, but it's pretty low. The mode is 260,000. It's less than half of that. Not a great indication, but we also know that it's rollover. The range is 14.5 points, which is pretty poor compared to the mode of 28. So pretty dull day now that we've gotten non-farm payroll behind us. The Monday after non-farm payroll has a tendency to be relatively choppy. Let's look at the technical side of this. There's a lot to cover in the non-technical side. Here's the S&P. S&P, good breakout on Friday. Almost, the Nasdaq, sorry. Here's the S&P. Pretty wide IB, did a lot in that first hour. You could see a lot of bars in that first hour. And a very valid IB high here. Pretty weak IB low. Pretty weak IB low. Tapped twice. Came all the way back to the open. Very difficult trade. I wasn't here on Friday, but I would imagine that this was a tough read in that it pushed directionally, came back all the way to the open, only to breach the IB stat to the upside. I would have expected that this double TPO or double IB or weak low would be breached and we would be heading back to the prior low a day, but it didn't do so. I don't think I would have done well on Friday, to be honest with you. And then since then, it has not given up any territory. So as we pushed into new highs, and you'll notice that these numbers are quite high. Remember, we're adding 52.75 points to these numbers, to March's numbers. So if you're looking at this on your March chart, my prices are going to be dramatically different. And that's because we've added 52.75 points to every price. And so it's a lot higher. So the overnight high in March is going to be approximately, 14, something like that. Versus 46.6650. But what we have here is a market that has not given up any territory from Friday's high. And the distribution is quite balanced. And so what we have here is the overnight point of control VWAP on top of each other, an indication of balance, a technical indication of balance, with the mid in tow just a little bit above. We'll also note that the VWAP has served to shut off a lot of the buying in the overnight session, and now we're starting to crisscross it. So it was weak through most of the overnight session, and now we're just kind of sloshing around the VWAP, and we expect that sloshing back and forth around the VWAP to continue into today's opening session. The settlement is right here at 46.60 and a quarter. So there isn't a clear indication on what the market wants to do this morning. That's just using the overnight session. But when we look at what the market has done on a day-to-day basis, I went back too far. On a day-to-day basis, it has clearly continued to squeeze higher, and we're almost getting into that gap zone above, which was at 46.21 in the March contract, which is 46. 46.73 in the March contract. So it's 46.21 in the December contract, 46.73 or 74 in the March contract. So if you recall last week, I talked about, yes, I'm in March. I'm confusing these things. I'm in March. December is behind us. Don't care about December anymore. It is done. It is used. It has expended itself. It's done. So we're only talking March here. If you recall last week, for the December contract, 46.21 was the target to the upside all week last week, and it's resting. So that's in Z3. In H4, that price is 46.21 plus 52.75. So you do the math and you get 73.75, something like that, right? So that was the target to start pushing into this this area. That was the key target last week, and we ended up opening at the low, finishing at the high. Pretty active price discovery on Friday. So if you look at the volume profile, it's very blunt. There's no real value established on Friday. There was no acceptance of any prices. So therefore, there's no value. Even though we have a point of control near the high, we didn't really establish value on Friday. You could see the point of control in TPOs is low. The volume point of control is high, the volume point of control being more accurate in this situation. And we managed to take out the prior high. And then this morning, we're just resting right here at 46.58. We're trading right in here right now. So it's not given up any of the upside. We are still, we have been in balance, and we are breaking to the upside of balance. So just as expected, we are very much squeezing the shorts here, and we're likely to continue to do that going forward. This morning, honestly, I'd love to say something different, but all in all, it's gonna be pretty choppy, pretty sideways. What is going on here? ES 4605. This isn't right. Something's up here. Something's up with my data. This should have rolled. So the roll settings for, yeah, this is correct. It'll reload. I just didn't reload this chart. I was going to trace the movement of the point of control, which is a pretty nifty way to keep track of how the auction is kind of proceeding, and we could see the point of control is tracking up. So here it is. This is your March data. You can see the point of control kind of having a few pullbacks, but in general is tracking higher. So this is the track of the point of control. Okay. And until that stops, you have to lean, you have to have an understanding that the buyers are controlling the auction. And so we have to basically, accept that pullbacks are likely to be seen by larger participants as opportunities to jump on the buy side, just like we saw on Friday. So that's that. I don't have much more to say here on the S&P. I mean, this morning, really, what's the expectation? An open auction, most likely to pull back to the overnight low, and then to just hold steady and most likely push higher. I expect the primary scenario to eventually squeeze higher. But given Friday's range, given that we're opening in balance, it's anybody's guess what this thing is likely to do. So I'll probably wait the first bracket, the first half hour, if not the first two brackets, unless something really obvious comes across. It would have to be the first one or two brackets before I'm interacting with this thing. Okay. Same with the NQ, seeing the same sort of stuff. The NQ, however, has already pushed. It's got its overnight point of control, and VWAP on top of each other. It's already pushed to the above, and it's very likely to just bounce around. Given the way Friday closed with the point of control near the top of the range, the IB high broken, we expect Friday's high to be taken out in both the S&P and the Nasdaq. So I'm looking for this to be taken out at some point. But again, my expectations are relatively low. Look at how the delta is. Same in the S&P, pretty flat. Not much participation there. You got to figure that with the roll, that's also muddied. Looking at crude, crude has made some pretty good headway here. A decent bounce out of the 68 handle. Crude did what it was supposed to do, or it's not supposed to do anything, what was expected to do last week, and is taking a bounce. Crude has a weak high, big battle into the 72 here at 71.81, and is trading in the middle of the range. And on top of Friday's point of control, crude is imbalanced, keeping my hands off of crude for now. There's just not much here to work with in terms of directional or unfair prices. Unfair prices are where we have the best opportunity. These prices are relatively fair currently. And so crude is kind of going back and forth and is not accomplishing very much. Here's crude. You see that? It's pushed into the 68 handle, got rejected, and tried to fill in the gap a little bit. And now we are right in the middle of what is a completely balanced profile on Friday. Crude is expected to balance out for today and eventually move back into and check the 72.40 area, close this gap before we figure out what it wants to do next. Good luck today. These are the rollover adjustments. Don't forget to hit the like button, and don't forget to subscribe to the channel if you don't already subscribe. Good luck, and I'll catch you tomorrow morning. Take care.